Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's discuss and figure out what has happened and what we can expect moving forward. If you enjoyed, don't forget to hit that like button. Again, this is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. The link is below for $3 a month, where I share my intraday thoughts on Tesla as it's moving throughout the day. But moving over to Tesla closing the day, down actually to about $267 per share, which is going to be a smidge over 2% in the red, which compared to the market is, you can argue, roughly in line with at least the tech sector, if you will. QQ down about 1.1%. So Tesla, kind of roughly in line with the way tech is performing now. The question, of course, is what does this mean? Is this bad or is this good? So you can see SPY is below the 50-day moving average, getting a little bit of a rejection. They're not looking too hot as well with QQQ, pretty bearish looking candle as well. Now, unfortunately, Tesla, a bit of a bearish candle as well, right? We have a hammer candle, inverted hammer candle, a red one as well, which is going to be pretty bearish. And it is happening after a pretty, respectable, for the most part, uptrend that we had ever since the low 200s. This candle right here, during an uptrend, not always, again, everything you hear or whatever, when it comes to, technical analysis, whatever, always take with a grain of salt. Nothing is guaranteed. Nothing is 100% certain. It's all about probability. But unfortunately, this candle at what could be, in this case, the top of an uptrend, usually signals that the uptrend might be over. So that's number one, right? We have a pretty bearish hammer, inverted hammer looking candle after an uptrend, which isn't great. If we get a massive gap down tomorrow, that could be bad as well. It'd have to be a pretty sizable gap down to be fair. Like it would have to be it would have to be a pretty substantial one, actually, like over 3%. I doubt it. But if we do, that will create an island pattern, a bearish island pattern. We had a bullish one over here, and that would create a bearish one over here. But again, it would have to be pretty substantial. Pre-market or post-market right now, a downtrend, which I don't think we'll get, but nonetheless, it is not a good start, right? We, of course, are also closing below the $270 range, which isn't ideal as well, right? I talked about the 270 range being really, really important. I talked about how this candle, it can be a bit of a bait, right? I talked about how I have that 3-day rule, where if we break above what I view personally as a very crucial and very important level, which I've talked about, this 266 to about 270 level being pretty much that level. The fact that we broke it so easily yesterday, I talked about how, it's a phenomenal break, but I want to see strength. I want to hold above 270. I want to maintain above that. And I want to see some confidence above that level, because this can be essentially a bit of a bull trap, right? The 3-day rule, where I want to see strength for about 3 days post breakouts, right? Which would include tomorrow as well. Unfortunately, we already fell below it. Thankfully, it's not like a complete and utter sell-off well below what yesterday's run was. It could have been worse, in my opinion, but absolutely showing some shakiness with, of course, inverted hammer candle and a breaking back below 270. If you're wondering why I'm saying 270 or that 267 to 270 level, just in case maybe you weren't here or you missed it or whatever, quite simply, it is the Fibonacci level, right? Take it from that swing high over here from earnings to the recent swing low down all the way over here. And you can see that puts us at a beautiful spot of about, again, this is not perfect, right? Just keep that in mind. This is just a very rough example. But, the 618 level is sitting around the 266 level, which we are still technically above. But I kind of give it up to about 270 because not only is my Fibonacci not drawn to absolute perfection, but it was also because, if I remove this quickly over here, you can see a lot of resistance back over here at about 270, which we did break below above yesterday, and now we're of course back below. So it is just an overall area of potential resistance as well. So 618 level on Fibonacci is important because, as I said many times, that's the level I'd want to break above and hold above at least some days to show confidence, to really kind of make me kind of confident that this downtrend from earnings is over. But because we're breaking that back below it and we're kind of like teetering the line there, honestly, we're very thin ice over here. I'm still not very confident that the downtrend from earnings is indeed actually over. Tomorrow will be important, by the way. Don't forget, tomorrow is CPI day. Very, very important day. And then the day after that, Thursday, is PPI. So pretty crucial. Now, take a quick look at option flow before we continue on, because this, of course, is pretty important to kind of get an idea of not only what, literally the option flow is, because that can affect the actual movement of the price, but it also kind of, gauges sentiment a little bit on Tesla. And unfortunately, that is quite a lot of red, right? Not many green bubbles, and if there are, they're pretty small. substantial amount more red bubbles. Again, a lot of them are pretty small, but you can see this is like pretty vivid red over here, which tells me that there's a lot of red bubbles over here, a lot of bets on this area over here sitting for December 23rd. Probably a lot of these 100K rough premiums kind of stacked upon each other, but you can see the most obvious one, in my opinion, is this really large one over here, sitting at about $1.5 million in premium, which of course is going to be a 265 put on Tesla for September 23rd. Which of course is not very long from now. So, you know, a bit of a shorter term bet on some downtrend continuation on Tesla. So options flow is definitely looking pretty bearish when it was looking pretty bullish before even this run started and even during this day. And then of course I said how the end of yesterday it started flipping bearish, and I'm sure we can kind of see why. And most likely on this run up in the morning that we had, probably continued going even more bearish as more people kept piling in on puts. And then of course Tesla sold off for the rest of the day. So that's important to understand. Taking a look at the RSI and the MACD. RSI looking pretty okay, honestly. On the daily, not looking too shabby, nothing really obvious. The MACD still looking pretty okay, definitely a little bit more bullish than bearish, but you know, definitely kind of looking like it's slowing down a little bit, but definitely not looking bearish, at least not yet, that's for sure. I do want to also talk about on the daily for the RSI. You know, there's some concerning factors where, you know, we are pretty much at the levels that we were back over here, back when Tesla was sitting at 274, which is exactly roughly where we traded today. But the RSI was sitting all the way up at almost $90 or $99, but at 90 when we're pretty much at the level again. But unfortunately, we're barely breaking 60. So, you know, a little bit of a questionable looking RSI there on over to the 65-minute chart. We obviously went substantially higher, right? Ever since over here, we've been kind of, you know, went sideways for a bit, but then of course we naturally went even higher. But the RSI didn't even make higher highs, while the stock very obviously made higher highs. So a bit of a soft bearish divergence there, in my opinion, but you know, it got pretty close to the same highs, so it's not a substantial one, but still something worth considering. And the MACD on the 65-minute chart looking like it's about to cross over to the bearish side as well. It's extremely close, so definitely want to keep your eyes on that. We also talked about this many times, but the, you know, seasonality for Tesla, September and October being the worst 2 months. We've said how September, at least this September, can be one of those Septembers where it's really not that bad, or it's not that red, could even be green, right? Because it's not always red, or else this would be obviously a much different looking bar. But you know, this is going to be something to consider. There's still a lot of September left. The indices themselves are not, in my opinion, looking you know, too healthy right now. They're looking like, you know, they want to retrace it down a little bit more, right? They're not looking the best in my opinion, and that of course can affect Tesla. Also, let's talk about options, order book rather, right? If we go over to the daily, you can see here, we have a lot of potential selling pressure sitting at pretty much just a break of 300. And we have some buying pressure sitting at the lows of about 230 on the 65-minute. However, you can see some buying pressure actually sitting over here, pretty much roughly where we bounce right now, with selling pressure sitting also very close to the 300s as well. So take that for what it's worth, I guess. Let's go ahead and close this down. Let's take a look at the squeeze meter. I doubt we're going to see too much on the squeeze meter because we just had a massive run. So not a whole lot happening on the squeeze meter, unfortunately. So not going to be much to say there. One thing that could be interesting to look at is going to be the short volume. Let's see if it's increasing. It's actually, that was the daily. The short volume on the, that was the weekly rather. On the daily, the short volume is actually ever so slightly increasing. Nothing substantial, nothing crazy compared to what it was all the way over here, for instance, but you know, a little bit of an uptick after the 10% rally yesterday. So that's another point to mention. But again, nothing in my opinion that's ridiculously worth kind of pointing out. Now, the main thing I'll be looking at right now is if indeed this hammer candle, inverted hammer candle, is going to be signaling the end of this current uptrend, which I talked to my members about plenty of times. I said how, you know, I do expect some softening, some cool off happening very shortly. And that's what we're kind of starting to see over here. But if this does indeed dictate the top, which it very well might, it's usually a top indicator, not always, but usually, right? What I personally would expect moving forward is most likely going to be, first and foremost, a beautiful retest of the 50-day moving average, right? As usual, whenever you have a breakout or a breakdown, very common to retest that area once again. In this case, the 50-day moving average, as you can see, put up a lot of resistance for us as we just consistently got rejected by it pretty much almost like a week and a half straight. So naturally, now we finally broke above it, come down to retest that and turn it into hopefully a now support. That would be great news. On the flip side, we also can come down and retest this yellow line, which would be a tad below the 50-day moving average. But like I said, I have that 3-day rule. So if we go down there for like a day or two, not the worst thing in the world, as long as we come back above it relatively quickly, which can also be a retest of this yellow line, which also acted as a overall resistance for us as we were trying to kind of make our way through. Not sure why it's not loading. Here we go. Let's go to the 65-minute chart over here, right? Same concept over here, as you can see, right? This yellow line, same idea, where we come back down and retest that somewhere around the 250s-ish, give or take, but I don't think we'll go too much lower than that. And if we do, that's when the bulls can probably get a little bit worried and some sweat can start dripping down the brows, right? Because that's where things can potentially start falling apart. But that's overall what I am personally looking for as of right now. Again, keep in mind the Fibonacci, in my opinion, is probably the most important thing to understand. If we don't, if we just fall below this kind of 270 level, and especially like 266 roughly, which is barely where we bounced off of, but if we start falling below these levels, that is going to be, again, a little bit shaky and not looking so hot, because we definitely want to keep above them, or else this downtrend from earnings is not complete. And this was just nothing more than a massive bull trap. So keep your eyes on that, especially with tomorrow morning at, I believe, 8:30 a.m. the CPI prints coming out, which can absolutely break us down below, potentially even gap us down substantially as well, which would be very bearish. So I think it comes down to that. Tomorrow will be very important. We'll discuss it, we'll figure it out, and we'll talk about it as it happens. But either way, thank you so much for watching. If you enjoyed, don't forget to hit that like button, and I'll see you tomorrow. Peace.